Stocks are still vulnerable to further corrective action. I think the ideal price to buy stocks, S&P 500, is about 6% down. I'll explain how I come up with that number. The junk that has signaled a pullback about 2 weeks ago, so we were looking at that, and now the pullback has started, I believe. Dollar has hit 52-week highs, and gold pullback likely to continue as gold miners are flashing bearish signals. All this and more in today's edition of MasterChartsTrading.com market recap for Saturday, already December 21st, 2024. As always, please remember to hit the like button, subscribe to this channel, share this video, visit my site MasterChartsTrading.com to sign up for the indicators that I'm about to use for the presentation, as well as the daily newsletter. If you're a subscriber, stay tuned. We have quite a bit of various securities to cover, namely various ETFs, foreign ETFs, Treasury bonds, large cap stocks such as dividend payers, Caterpillar, Chevron, Travelers, UnitedHealth, infamous UnitedHealth, as well as some of the speculative securities such as AvidExchange, Pebblebrook Hotel, Roku, looks interesting, and Warner Brothers. There's also a little bit of gold miners at the end, but like I said, gold is under pressure. Okay, so today I wanted to start a little bit different. Right now we are looking at a 4-hour chart. So what does 4-hour chart mean? So when you're trading, so normally people trade on daily charts, meaning that each candlestick is 1 day's worth of activity. Now, if you want to trade intraday, or if, for example, you have a futures account, you want to trade continuous futures, a continuous security, you need to look at the appropriate or correct security. So, for example, if we look at the actual index, S&P 500 index on the 4-hour chart, okay, so 4-hour chart just means that the price action is divided into 4-hour candlesticks. So this is the actual index, S&P 500, on the 4-hour chart, and you can see there are tons of gaps here. That's because this index does not show overnight action. So let's say you want to have continuous position, you need to trade a futures account, which is continuous futures, meaning that the price is continuous throughout the day and throughout the night. So to do that, you need to find the correct security to trade. And in this case, I'm using ticker symbol US 500, and specifically I'm using this one. It's from after prime. Why that one? Is because it's the biggest volume. That's the only reason. And notice that here there are no gaps. So it's occasionally there is a gap, but that's because there is a gap between Friday and Sunday. So the Friday evening the stocks close, and then Sunday evening stocks open. But other than that, it's continuous. There's no gaps between the candlesticks. Okay. So having said that, we are currently looking at a 4-hour chart, and notice this gigantic red candlestick that occurred on the 18th of December, this Wednesday, when I believe the Federal Reserve decision was announced. And it wasn't a bad decision. It was an expected decision, but yet it was somehow extremely disappointing. That's another reason why I pretty much avoid, looking at the news when I trade. I pretty much try to stick with the price action, with the actual candlesticks, with the technical analysis. And okay, so this was a big, large drop. So notice that on this chart we have the 4 lines. So this green, blue, red, and yellow lines. And these are my proprietary indicators that show good areas to buy and sell. They're basically support resistance lines. So notice what happened. This red candlestick pierced this green line, not even a shred of resistance here, completely pierced this blue line, and then collapsed all the way down to the red line. And so it actually touched the red line and then bounced off of it. So then a little bit later on Thursday, you can see that we have a close below this red support resistance line. So in my mind, this implies an actual bearish indication. In other words, this is a trigger to sell short this particular security. Now let's pretend that you actually went ahead and you sold it with a stop on close above this blue line. So the stop has not yet been triggered because there was no close above the blue line. We had a couple of highs above the blue line, but then we closed below it. So what this is showing me is that we have resistance up here at around 5,900. So right now we're looking at this 4-hour chart, and I am wondering what is the direction of the further move. If I'm correct, and indeed this is resistance, then we can expect a move down into the end of the year and possibly into the early January. Also, a possibility is that we have a Christmas rally or Santa Claus rally, and usually there's Santa Claus rally and it comes, without fail. But will it come this year? That's a good question. So right now we're looking at this setup, and I mean, I don't normally trade 4-hour charts. I don't have a futures account, but some people do have futures account, or they can trade this CFD, or also known as contract for difference. So this security that I'm showing you with the ticker symbol US 500 on TradingView.com from Afterprime as the provider. It's a tradable security if you have access to CFDs, also known as contracts for difference. So technically speaking, again, we had a short signal. Right now we have resistance at the blue line. What happens on Sunday evening will be quite important. So if we manage to close above this blue line, then most likely we will have a Santa Claus rally. However, if this resistance holds, then there is a good chance we will continue into the end of the year and possibly hit around 5,700 on this chart. So let's look at now at the daily charts. So once again, daily means that each candlestick is a day's worth of activity. And I just mentioned that we can expect a move towards about 5,700. So somewhere around here where I'm hovering. So maybe the lows from the November here might get retested. Okay. Now, even if they do get retested, that's about, I don't know, 3% down. So I mean, it does look like kind of scary, especially on the 4-hour chart. It definitely looks big and scary. However, in the context of daily charts and in the context of where we came from, and we came from there. You see buy here, okay? So like at 4,200, and we're right now at 5,900. You see, we're pretty far out. A pullback of 3% is another day at the office, what they say. So if we continue dropping, I personally would get interested if we drop around 6% more towards around 5,500. So that's where my blue line is, and that's where I would consider buying S&P 500. That's about 6% down. If you're a subscriber, I'll show also several market breadth indicators that are currently saying that we're not terribly oversold, and we could continue lower still. So if you're not a subscriber, consider signing up. But if you're a subscriber, I will explain this in the members only video. But for this particular video, we can see that we're not yet, badly oversold. Also, this candlestick, just from a candlestick analysis kind of point of view, so this Friday's candlestick, it does not look very encouraging, because ideally the very bullish candlestick, where we would expect a follow through to the upside the next day, should look something like here, where I'm hovering on the 5th of November. It's fully green, or at least there is very little shadows out of the top. And notice here we have quite a large shadow out of the top. So this shadow just means that when the bulls tried to push the prices higher, the bears, people who think that the stock market will continue lower, decided to not let them do that, and they pushed the prices lower. And you can see it on the 4-hour chart. It's there. There's that shadow. Okay, so it's showing resistance. Okay. On the daily chart, it's showing that this candle is sort of awkward, and it's not at all bullish. So like I would still kind of be reluctant to be buying for multiple reasons, because I want to see a more oversold reading, and that oversold reading again is around 6% down, or around 5,500 points for S&P 500. High yield bonds, junk debt, showed a potential tapping pattern, and in fact, when I was analyzing the charts on 12th of December, so last Thursday, a week ago, 2 weeks ago basically, or a week ago, I'm sorry, this candlestick from Thursday the 12th, it looks very toppy. Again, so that we have a shadow out of the top, we have a red candlestick, and the close is the same as the low. Okay, so we have, this is a classic kind of shooting star candlestick. Yes, indeed, it was the top, and then we pulled back, and a significant drop after the Fed decision. Right now we also have this awkward looking candle, the green candle from today, from Friday, with a little shadow at the top, and not a very bullish setup, I don't think. So what I want to do is I want to wait and see what happens. So for high yield bonds, I always want to mention the fact that high yield bonds and stocks correlate highly. So notice this correlation coefficient. This is a high yield bonds correlating to the S&P 500, and they correlate very highly. So when we have tapping pattern for high yield bonds, I get worried, and I absolutely had a good reason to get worried, and we got a corrective action. So there's the December 12th. It's barely registered on the S&P 500 chart. However, on the junk debt, you can see it's quite a bearish candlestick with a shooting star kind of pattern. So that's my basic idea about what we're to expect. In the next, I think Sunday, there will be a good idea of what to expect, because I want to see if we're going to close above the blue line. If we do close above the blue line on this 4-hour chart, so above 5,900, then we can expect potentially expect a Santa Claus rally. However, if we continue having this resistance up here, then we might see a pullback into the end of the year, possibly into January. Okay, let's switch gears. We're currently looking at the dollar currency index. Dollar absolutely loved the decision by the Fed, where I'm hovering. Big move higher to new 52-week highs, follow through to the next day, and yet another high today, or rather on Friday, yet another 52-week high for the dollar. So most other currencies are in a downtrend against the dollar. Dollar strength usually weighs on various commodities. Gold is a commodity, and gold has been under pressure. So notice, first of all, this fact that we have a low from 14th of November, where I'm hovering, and the current low from 19th of December is still above that 14th of November low. So right now gold sort of doing that, what I just showed you, so like a slight up tilt. If we look at gold miners, GDX, you can see that they're much weaker. Okay, not only, so notice where gold is. Gold is right below the green line. Okay, notice where gold miners are. Number one, they're below the blue line. Okay, number two, we see a bearish kind of tilt. In other words, the recent low is actually lower than the November low. So this is a bearish divergence versus the gold. So gold miners are leading gold lower. Not a good sign, once again. So this implies that there's going to, most likely going to be more corrective action. Okay, unless something happens and all of a sudden we move higher, I think gold will continue to pull back, and when or if we get to this 2500 level marked by this blue line, we will consider if we even want to get into gold, because just the way gold miners have been behaving, I'm not sure I want to be touching them right now. So that's my kind of take on gold miners. Let me know what you guys think. Also, what you think about the S&P 500 and especially the 4-hour chart if you trade intraday action. Let me know what you think. Other than that, stay tuned for how to find me on the internet. If you already have signed up, then have another great trading week, and I'll talk to you next week. So if you are interested in signing up for my indicators, so the indicators are this green, blue, red, and yellow support resistance lines. They are available for tradingview.com. So tradingview.com is an online interface. It is free of charge. You don't need to sign up for a full account to see my indicators on your chart. So once you sign up on tradingview.com, come back to my site, MasterChartsTrading, sign up for my indicators, my trading indicators, and then once you signed up, I will open the door for you on TradingView, so you'll be able to see exactly the same chart as you're seeing right now on the screen. If you need my newsletter, so I send out daily alerts and as well as a weekly newsletter, video newsletter on various securities. You can see we cover a lot of securities, so you basically can trade something every day, or you can only trade as much as you want or as little as you want. For example, if you only want to trade large cap stocks, you have available those, or if you only want to trade ETFs, that's also available. I also offer, as part of the service, I have the speculative securities that I send out alerts about them as well, and there's sometimes very good patterns that sometimes come up. Now, it's not exactly what do they call it? Let me see. United Airlines. I wanted to show you. Yeah, United Airlines. So this is actually my position. I recently opened United Airlines. So this is the kind of more speculative, I guess, opening, because you see how there is this very relatively tight trading range that goes back to like this, about a year back. and I went ahead and I opened on close above the blue line, and it just took off. I mean, like a rocket. Reason being is because this high here from the May of 2024 was basically the only thing that's standing in the way of the bulls. And once it was overcome, where I'm hovering on the 26th of September, it just took off. So right now I'm holding still about half of my position, and quite happy with it, obviously. So this is the way we trade, you know, securities, as well as speculative securities, as well as, you know, not speculative securities. Basically, we're looking for a close above the blue line. All right, and then the best deal, of course, is to get both trading indicators and newsletters. You always get a free 7-day trial, so you have time to cancel at $49.95 per month equivalent for the year. I think it's the best deal to get both trading indicators and newsletters. But of course, you can also get monthly plans, and if you want to try out any of them, we can also convert you later on to a yearly, should you so decide. That's it for this week's recap. Again, please don't forget to hit the like button, subscribe to this channel, share this video, and I'll talk to you next week. Bye bye.